in the market. Another beautiful day as a Bitcoin trader. Not so much as a Bitcoin hodler, but at least as a Bitcoin trader, it's a beautiful day. Welcome, everyone. So I decided to quickly go live as price is moving to the downside and I can see some emotion and all of that stuff. So I think it is a good idea to go live. We can chat, look at the chart together, explain what I am looking for, chat with you guys what you are looking for, and we'll probably start by, we'll just start with Bitcoin, and then we'll see where we're going to end up. No, don't really have a specific schedule for this live stream. It was pretty spontaneous. For the people in Discord, you know, I was like, well, I might have to go live. And then based on the replies, I was like, okay, you know, guys, I'm booting up. So here we are. I mean, probably it's going to be about an hour, right? Usually it's about like an hour or something, or two, or six. That's the longest one we've had so far. You never know when you join the live stream here on the channel. You never know. We might be here for a long time. Anyway, let's switch to the chart, shall we? And the chat. Okay, I decided to put on a little poll, just you know, if you're interested. But what's up, everyone? Boogie, Sayori, Mac, good afternoon. Are we going to have a relief rally? Yeah, it's just gotta wait for things to slow down. Like at the moment, there's not been any sign of strength. There has not been any market structure change. Of course, this morning we were still looking for price to move to the downside because the range that I covered in the morning analysis was higher probability corrective, meaning in a trend down, you're looking for downside, right? So you expect the low to be taken. And that was over here. Right, so that was this range that I covered in the analysis in the morning. And price indeed broke to the downside, retested the value area high, which I covered this morning as well. And now we're at the range point of control. So not too bad, not too shabby. And yeah, there's not been really any sign of strength. I mean, the opposite is actually true, that volume is increasing as price is moving down. So kind of like initially for the fun and giggles earlier in Discord, I was like, what if this is a bunch of 1-2s instead of 4-5s? And then volume is increasing. I'm like, you know, you need to move back above 70.7K to at least invalidate the potential of a multi 1-2. But yeah, it's you know, like when the chart is volatile, it's interesting to analyze and chat. So that's what we're gonna do. God help us, where is it going to stop? Well, we're currently at important support, right? So 67, 63, the range between 61 and like, let's say 70, right? It's an important area on the chart. And I can explain a bit about what I'm looking for. I think that's going to be helpful as well in this live stream. Won't stop until eventually hitting and perhaps falling below the 200-week MA. Yeah, let's check that one out as well on the higher time frame. What's up, Legendario? Solid Fab, there he is. Solid Fab. Yeah, it's a big difference. It's only one letter, but cheers for all the kind words about the entry membership, man. Last 2 days. Kevin, of course, with the question. Attila, what's up? Wayab. All the familiar names popping in. Mido, Bearwolf. I'm looking for a bounce, or I'm looking to capitulate on these longs for a pretty heavy loss shortly. Yeah, I mean, of course, prices at support. Everyone needs their plan to see if it's interesting, yes or no, and if people want to jump in along. But you know, like the trend is your friend till the end, no? As they tend to say. So, right. But I'll explain again a bit more about what I'm looking for, I suppose. Sam, what's up? How you doing? Good to see you pop in. Odin, light blue name nowadays for the mods I see in YouTube. That's nice. Yeah, all good, Thomas. Nice to have you here from Jamaica. 876 trader. Everyone from around the world. Good to have you here. Right? If it's your first time, my name is Koen, and I'm an Elliott Wave analyst on the YouTube and trader. And we're going to cover the chart. 65K tomorrow, 200 daily resistance line on the week. The million dollar question. What would be your $1 million question right now? Give us a question. Give us $1 million question for myself and chat with the move since all-time high. What's the $1 million question? Makes me curious about your channel. RSI is going crazy down. Yeah. Is there a divergence on RSI? Let's just start. Let's check out the chart. Let's check out the chart. So anyway, I just saw a message about RSI. Now I don't actually really use RSI in my Elliott Wave analysis. Do I have it? Yeah. But we can have a look at it, no? So there's no divergence on the weekly. There is no divergence on the daily. There's no divergence on the monthly. So there's no divergence at the moment. Basically, like I suppose many people use RSI. It's a very, very popular tool. But of course, we preferably see a lower low, but a higher low on the RSI, which we don't see. Right? On the daily, the weekly, and the monthly, price is just moving down, and so is RSI. So RSI here created a new low. On the weekly, created a new low. Right, of course, yeah, I mean, created a new low, and on the monthly, it's just moving down at the moment as well. Also interesting on the monthly, I know I'm not on the index chart or Bitstamp chart with the complete history of Elliott Wave or Elliott Waves of Bitcoin, right? But even if we check RSI here, you can see that in the bear markets, the RSI tends to go deeper and deeper. Let's actually check this on a chart that has history. So I'll put it on log for a second. Yeah, so there's definitely something to say about pulling a trend line on the RSI. And so far, it's been relatively well respected. So RSI here was 45. This was 43. This was 40. And if price continues in a relatively straight line, it should end up around 38 for, at least for another bear market potential low. And we are not yet at 38. We're not yet at 38. So, yeah, interesting. Let's go back to my chart. So what we're going to do is, of course, Elliott Wave analysis. I mean, I kind of covered stuff in the morning video, but I'll shortly do a little bit of a repeat. Yeah, I mean, then we'll probably check out some other charts. Yeah, so Lion indeed, the RSI is moving down, but keep an eye on RSI around 38 on the monthly time frame, right? Because if we pull that trend line on the RSI, then the 38, 39, like that area could be a bear market low for the RSI. At least it will touch the trend line, and then we'll have to wait and see what happens, no? Yeah, what would she do? She's probably in a long at the moment. Jeroen, what's up? What's up? That's an R, right? Yeah. Roga, welcome. Mods can make a shield wall. Yeah, exactly. Will it go as low as 30K? No, we take it step by step, range by range. At the moment at 67. I mean, I saw a good message from someone in Telegram. Wait 1 second. Let me open this. Right? I saw a good message from someone here. Pop. So in Telegram, can I open this chart? No, let me just open Telegram itself. So I just close this, and then I do this. Plop. Almost there. So this guy in a Telegram, I got to say, though, that Discord is way more active than Telegram, as you'll know if you're in Discord. But this guy here, who is, Dom, so Mr. Dom, on the 2nd of August, 2025, put a photo in the chat. And he was like, and of course, multiple Elliott Wave analysts, including ourselves, we're looking for an A-B. I still can't believe the people going up with the multi-1-2 at the end of a bull market. But anyway, we'll cover that in a bit. But he posted this in the chat. with the like 1 2 1 2 3 4 5 4 5. Very interesting scenario, right? This is your typical flat A, B, and an extended C to the downside into support. He has the monthly naked point of control on the chart, 57.9. Yeah, you know, I think that like if we look at where we are now, we're not far away. We're not far away. Now, if you are not in like Telegram or Discord, there's great analysts everywhere. So, you know, feel free to join. But yeah, let's get this started, no? Let's get this started. Let's get this started. At this moment, we are oversold. I mean, depends on the RSI, of course. The problem with, look, the problem I have with RSI is that you can be in like oversold or overbought territory for a very long time without seeing a turn in the market. And I will probably never forget 34K. So if I got to show this. If I go to RSI, 34K, I don't actually know if it was the daily or the weekly, but I remember price here moved towards the up. Oh yeah, it is. So price moved towards the upside here, and we got the first like divergence on the daily, and that happened at 34K, right? Price never revisited 34K, okay? Like you can kind of see that the RSI neutralized again during this move down, but it never got back to 34 till you made the all-time high. The first divergence was at 34. This low was at 38, and then you just moved up and up and up, right? So RSI can be very useful in the hands of an experienced RSI analyst, or, you know, one of the tools, one suppose, like, you know, one can imagine. For an Elliott Wave analyst, you're looking for a divergence between wave 3 and wave 5. But yeah, I don't tend to really use Elliott or RSI much, to be honest. What do you think about parallel channel? I find them useful. Yeah, parallel channel, very useful, 100%. I mean, you know, you can pull, of course, channels of this move to the downside as well, like an impulse. Okay, let's start the analysis. Otherwise, I keep chatting. So, we're going to start on the weekly time frame. Let me move my weekly folders up and do this. So let's start by keeping things extremely simple. So, of course, for the people like that have been in previous or have seen high time frame videos, you'll probably know what I'm going to talk about. So what you see on my chart here is the previous two bull markets, and I quickly only labeled wave 3 here because this would be 1 2 3 4 5, but I excluded the 5 and the 1 2 here. And what you see is basically a bull market extremely simplified. You don't actually need anything else except kind of what I'm explaining here. So the bull market starting here around 2015 and ending around 2018, 2017, what we can see is that price moves up with an overlapping structure, right? Every new range overlaps the previous ones till you get a gap. After the gap, you expect a couple more ranges to mimic the amount over here, and then you create the high, right? Preferably these ranges overlap, which was not the case in 2017. And then we go over here, and here you have your ranges, your overlap. You create a gap, and then once again, you can also see just price curving, right? So you go from horizontal, vertical, back to more horizontal price action, right? It's slowing down. Volume is decreasing. And now we're here. And you can go back to videos of months ago where I show this, that, well, this looks like the overlap. This looks like the gap. And here we have like your ranges coming back. And volume is decreasing as price is moving to the upside. I always strongly disagreed with the analysts counting a multi 1-2 to the upside over here. Did not make any sense to me because you already moved from 15K all the way to like 100K. This, from a cycle time, like from a cycle perspective, this already took about like the duration of a bull market pretty much. And a multi 1-2, when price is moving up on decreasing volume, you already had your gap. I don't know, it just didn't make sense. So we're looking for a drop, right? We're looking for a drop. And this very simple like way of structuring a bull market is also called trend and turn in our community. It's not really Elliott waves, I know, but it's kind of like part of my own theory. We call it Kuhn's theory. There's many different things, but I don't really want to talk about this. It's just simplifying an impulse, simplifying a bull market. You start with overlap, then you get a move up on increasing volume that creates a gap, and then the ranges and the overlap returns. The moment you see this, right, that's exit. No? This is like your entry. That's what you like to see. This is the ride you want to take. And then over here is where you are starting to get out of positions. Now we're on a weekly time frame, but you can use the same on the daily, the 4 hour, the 1 hour, the 15 minute. You will see this structure on every time frame, which also means that it's interesting that once you start seeing these ranges here, right, one can slowly start to pay attention or like pay attention to shorts instead of longs, or at least selling. Anyway, so we were always looking for something to end, not another 1-2 towards the upside. Some people may remember the huge moon that I had on my chart here as well, and always the saying like, I don't believe it. So this is your, yo, Piper and their viewers just joined. Whoa, what's up? Thanks for the, how do you call it on YouTube? No, thanks for coming to my channel, I suppose. Yo, what's up, Piper Academy, man? Thanks for popping in. If you don't know Piper, check him out. Check him out. Check him out. Oh, and I have a poll going. 60K. The low will be 60K. Most people say. We were just starting with the analysis here. So on a weekly time frame, your bullish scenario would be a flat ABC. Right, so finished bull market, 5-wave structure, followed by a flat A, B, and wave C, which means that this move down is then counted as an impulse to the downside. As per previous content, common minimum target is that low, which is now taken, so that's good. But then, of course, at some point, we need price to slow down, right? And what we like to see, similar to actually the bull market, is we like to see price curve again, right? Move from vertical back to more horizontal price action, right? We can go to the previous bear market from vertical, horizontal, right? Back into ranging environments. Quick, high volume, curve. That's what we're looking for. That increases the probabilities we're getting to the end of something. Now we'll have to wait and see when that happens, no? We have to wait and see. Usually, once you start curving as well and volume is decreasing, you still create a couple more lows, 1, 2, 3, right? You still create a few more lows, but you like to see this typical structure down, couple more lows, vertical, horizontal, decreasing volume. If this happens on an area of support, then that is very interesting support. Trend and turn methodology. There will be a free PDF. We're creating that now. So that is your quote-unquote bullish scenario, because this is then a wave C. And after wave C, you expect price to reverse. Your bearish scenario, though, by now probably, I mean, we can put this, we can keep this on the chart. But basically, if this is an impulse in the potential C, it also means it could be an A or a 1. Now, the impulse is exactly the same. You're looking for a 5-wave structure to the downside. After 5 waves, you go up. The question is, what is the move up? Is it corrective or motive? If it's motive, one could look for the high. If it's corrective, meaning a 3-wave move up, you expect price to go back down. We'll have to wait and see. Doesn't make any sense to think too far ahead in time, right? We're currently in a move down. There's no reason to really talk about a large trend back up and analyze. We have nothing to analyze to the upside at the moment. So when it comes, we'll analyze it and we'll be able to see if it's corrective or motive and then adjust from there. No. Daily impulse. Do I have anything else? No. So let's go to the daily. Another scenario is that quite simply the bull market ended at the high, by the way, but you'll see that with my daily scenario. So on the daily, this is the one you saw from the video earlier today. Impulse down. We just got to wait for the 3 to finish, right? It's just a question of when price, it moves down sharp now. At some point, it will go sideways again, no? So as long as price is not showing us a bit of a sideways range, we just drag the fips to the downside, the line to the downside, right? We don't want to kind of guess when a potential 3 is ending. Now we want price to show it to us, which means that also locally here, we want it to slow down. Double zigzag, this is actually your bearish scenario. ABC, X, ABC. This wave A is the exact same structure as an impulse down here. It's just, this is either your wave C or you're gonna count wave A, this latest move. So the bulls are actually looking for an impulse down and price to move up. The bears, they're looking for a wave A here and then get a B and another C. This is then your hopium pump. Oh, the trend continues. New all-time highs. We're done, right? Bear market is finished. And then poop, you go back down and you take all the stop losses, liquidity, and all that good stuff. So that's what's happening on the weekly, right? So basically, like what can you take home? Because I've been talking about multiple things. Price is moving down. The probabilities were highest for price to move down based on the weekly. And at the moment, you can see it accelerate as well. On a daily time frame, your volume is currently increasing here. As price here is moving down, volume is increasing, and we can also see, right, it moves down sharper and sharper. So there's not a great buying opportunity at the moment from a trading point of view, or at least from an Elliott Wave analyst point of view. There's not really a great reason to jump in. What I would like to see is either get a 5-wave move up, miss that move, followed by a corrective structure down, which we'll be able to analyze as we always do. And then this is going to be the opportunity. Take out this high as a minimum target, potential for continuation. And the other option is that price is just going down. That's fine. Give it time. We're on the daily. And at some point, slows down, 45, 45, 45, blah, blah, blah. It starts curving again from vertical to horizontal, decreasing volume into support wherever this is, because we don't need to preempt on where price is going to make these moves. We will be able to get more accurate the moment we have more information and price actually starts slowing down. But then, of course, if price does this, that's also an opportunity because price is curving, just like the end of the previous bear market, right? It's the exact same thing. Price moves from vertical price action here, very sharp, and then it slows down in this range, right? It kills the momentum to the downside, right? So basically the bear market here, that's your overlap, right? Relatively slow start. It's your acceleration phase. And then once again, you start moving more sideways. You create one more low. But this is where the interest is. This is where the DCA happens, right? If one is a DCAer, no? You take out this low. Well, did we know this was going to be the low? No, not necessarily. It could have done just this and then make another low and another. But you're not looking for significant downside anymore because the ranges are getting larger. So you're always going to look for price to eventually move up, which means that that is the moment you're interested to get in. And if that is not a place you entered, then the second best case was in this range. Because as price moves out of 50 or moves up from 15K to the upside, we can count a 5-way structure. Now, is this high either a wave C for a flat ABC? And then you go down again. That was the bearish case. The bullish case is continuation. But the moment price moved above that high, once again, this means we go up. And you'll have to go to old content for the detail. But that is the moment where the probabilities change to seeing a move up. And this is likely either a wave A or it's a wave 1. So you're always looking here for another leg up in either a wave C or a wave 3. And then we'll just have to follow the move up, right? And then we'll see what happens. So even if you miss the low, right, there's no need to snipe the low. You can. But there's always another opportunity. So now that price is moving to the downside here, we'll see how far it goes. Right? We don't really have to stress, unless, of course, you're in a large losing position. That's not great. But like, you don't know how far it goes at the moment. Something I've been considering today, actually this, I think in the morning routine for the elite members, I'm not sure if I covered this, but something I was considering here was, what if this here, this is 1 hour, we go quick to the 1 hour. What if this is not like your 4 5s, but these are 1 2s? Right? So yeah, we're just waiting for price to show us some information. No, on the 4-hour time frame, the move towards the downside, volume is increasing as explained in the morning video. I'll get to the chat in a second, by the way. So in the morning video, I explained, well, currently price is moving down, volume is increasing. Preferably at the latest stage, we like to see a range and get another 5 to the downside, another move down on decreasing volume, as it is most common to end an impulse on decreasing volume. Another low, but decreasing volume. Quite clearly, currently, price is moving down on increasing volume. So we'll have to wait for price to slow down. Now, something I considered earlier today was, well, what if these are your 1 2s? Because I saw volume increasing. And what we can also see here is price. Look at the curve here as well. It doesn't look very bullish at the moment, no? That looks like maybe a bunch of 1 2s. So what if these are 1 2s here? We are in R3, highest volume, currently in the low. And we have yet to see our wave 4s and wave 5 at some point. And then that is your 3, end of 5. So you have an extended 5 here, right? Wave 5 is the longest. Then you get 4, and then you get one more 5. That is something I currently have in mind, which basically means more downside. Your bullish case would be finish with an extended 5 and then go up. The trade opportunity is exactly the same, right? The directional bias is the same. It's where your 1 2s, you get your 3. Hopefully we get some nice price action, because not gonna lie, the lower time frames were very messy here. But it would be ideal. Hopefully no market maker is listening, or maybe there are market makers. There are market makers in our group, actually, like real market makers. But like you can't tell them like, please do this or this, you know. But anyway, it would be nice, Alum Club, hopefully you guys are listening, to eventually slow down, decreasing volume, and then on support, that's an opportunity. And then you either get another 4 and a 5 down, or you create a low and you get a bigger move up. This low here, this wave 5, that is going to be either a C, it's an A, right? It it's a C or it's an A. That's the two we're currently, or it's a 5. But it doesn't matter what it is, because your trading opportunity is the same, right? You're always looking to long it, and then the management is different. So after C, you want to see 1 2 3 4 5 correction and continue. After A, you look for a wave B, corrective structure and down. After 5, you're looking for a large move up, but the move up is the same. So the trading is the same. That doesn't change. The setup is exactly the same. You're just looking for the long. Okay. We are now officially in my aware zone, which is the first big area of support that I have on my chart, 67.9 to 61.1. In this area, there's 2 big levels, the 2 range point of control, 67.5, it's where we are now, and 63.1, bit of support at 62.2 as well. So wouldn't be surprised to see price slowing down here at some point. But at the moment, I have no interest in buying. It doesn't make sense. Moving down, increasing volume, right? To invalidate a multi 1 2 to the downside here, price needs to move above this high. Oh, there we go. Right. At the moment, that would be your invalidation if all of this is like 1 2s. I'm not too confident in that yet, to be honest, but it's at least something that's been crossing my mind. Right. So we'll just have to wait and see. There's a low on high volume. High volume low is just higher risk. Right? So if price reverses, that's fine. And then what I'll be looking for is a 5 followed by a 3. And then that is the opportunity right there. The orange areas are like secondary levels, basically. Depends on the amount of confluence I have with a certain Fibonacci strategy that I have on the higher time frame. which is called KRZ. I still haven't made a video about it, to be honest. So, yeah. Anyway, locally, on the 15-minute time frame, we analyzed this range in the morning, which had a higher probability of being corrective, increasing the probabilities to take the low. Now, we don't really have to talk about what happened next. So now we're here at 67, right? The longer a price goes sideways, the better it is for the bulls, as it is starting to slow down. If price can change structure, that's a positive, as then we're not at least looking for like a large multi-1-2 to the downside. We're still likely looking at least some wave 4s and 5s, right? We can count individual impulses to the downside here. And maybe this is a wave 5 ending on high volume. But commonly, a wave 5 doesn't end on high volume. Commonly, the highest volume sits in a 3, not a 5. So you don't really like to preempt like in a wave 5 ending on high volume. It tends to be risky. It's just less common. So therefore, right, with regards to looking for long opportunities, going long, expecting maybe an extended wave 5 and a bounce back up is risky. It's a risk versus reward. Some people may find it interesting, others not, but I don't. So I happily miss a first move up to get confidence and clarity, and then get the move down and trade that. And of course, short to high, because it's going to be trend and turn to the upside. Right? So that is then what I would be looking for. The other thing that I'll be looking for is price continues to the downside, as currently the highest volume is the latest 1-hour candle, but then price starts to slow down, decreasing volume into support. And then that is going to be the opportunity. And what comes after, we'll see. We'll see. But I learned my lessons back in the day, you know, trying to snipe lows and stuff. I'm not very good at it. I not with high volume moves like this. Right? I either, if something finishes on high volume, I generally either miss it and I wait for the retracement, or price slows down into areas of support, and then that's where the interest is. You know? So we'll see. We'll see. We're currently at least at important support. So that is something for the bulls, no? And that is basically it. So in summary, weekly time frame, looking for an impulse to the downside or a flat ABC. That's what the bulls like to see. The bears count like something larger, but the structure here is relatively similar. Anyway, weekly time frame, we were looking for a move down anyway and a bull market to end. We never believed in a multi-1-2 to the upside here. It made no sense at all. And now here we are, 50% dip from the all-time high. On the daily time frame, we continue to keep an eye on an impulse to the downside. Preferably, we would see another 4 and a 5. It's just a question of when does that 4 then happen, right? When do you get the end of 3 and start your 4? Of course, a wave 3 can end on high volume. Preferably then you form your 4 and get one more low in a 5 on decreasing volume. That is ideal. That is ideal. So we'll keep an eye on it. That's your bullish scenario, by the way, because the bearish scenario is that you get that same impulse, but instead of the low being C, it's an A, go up for B, and another leg down. Everyone gets hopeful, and you grab all the liquidity for a final push down, take out the low, and then reverse. A WXY is bottom line also still bullish, as you would expect the all-time high to be taken and start a new bull market. It's just that it can take some time. And on the 4-hour time frame over here, preferably, again, there we go, preferably here, 1, 2, 1, 2, 3, 4, 5, get another 4, another 5 to end on decreasing volume instead of high volume. Alternative count is you finish something on high volume. We just have to wait to get like any signs of strength, right? A first sign of strength is at least changing the market structure. That's a start, right? We're currently at high time frame support here. So a start is changing market structure. And then we'll have to see, because the move up for the bulls has to be a motive wave. And that's often what I look for in my content as well, is I analyze the range and I talk about, is it motive or is it corrective, right? And if it's corrective, we're looking for downside again. So the bulls need a 5 up. Yeah. Anything else? Weekly, daily, 4 hour. Locally, you need market structure change at least. Currently, a low is formed on a high amount of volume. Sure, we are at important support, of course, the aware zone. But I generally would expect a bounce in this area. It would be very unusual to see this area passed without providing any support at all. So I do expect some bounce or range. I mean, well, yeah, and then we'll see. My first aware box to the upside was this one here, which proved to be the all-time high. We're going to see if this is going to be respected. If this one is lost, we might go to the 50, or the next aware is in the 40s. That would be something, no? But yeah, we'll see. Take it range by range. There's generally no reason to talk about extreme targets to the upside or the downside. We just take it range by range. And as price is moving down on increasing volume, what I always like to say is just wait for a new range to form, as that will give you all the clarity that you need. Right? A range can be a bounce or price moves sideways. Of course, if you go up, then you go down, you start a range. This range will give us information. Right? Price goes down, starts creating ranges. It will give us information. Right? And then with that information, we can make some new decisions. Yeah, interesting. Very, very interesting conditions at the moment. And don't open crypto Twitter. Probably a good recommendation as well, with all the emotion. Let me quickly scan here. If there's questions that, of course, I missed because I've been talking about Bitcoin, please ask me again, because then I'll just scroll down. Whatever for wave C flat theory, that is not good. A wave C can end on high volume, right? So that is something, but it's about risk versus reward, right? Because imagine like you're looking for a wave C, right? So you have the flat A, B, C. Now, preferably wave C ends below the low. And we know that corrective structures, like a wave C, can end on high volume. But it's the risk versus the reward. Because ending on high volume, right, that end can also be your 3. And you get a 4-5. Or price just continues because it's not finished yet. So at the moment, right, the probabilities for a flat, they're still there. And we will continue to observe. There's no reason yet to disregard a weekly time frame flat, because it preferably is an expanded flat. Wave B moves above A. Wave C moves below A. That's exactly what you want to see. So price now moved below 74K. That's your minimum target for an expanded flat wave C. Right? The target area, we can quickly put the target area on the chart. So I am on log. Of course, linear and log targets are going to be a bit different, but let me just do this. Oh, it's not on log, so that one. And let me put this one on the chart. So for an expanded flat, your most common target is between the 618s, which is between 69.8K and 53.6K. This is for the bulls, counting an ABC expanded flat. This is your ideal area, right, for a wave C to end. And preferably this wave C then has an extended 5 here. So you have 1, 2, 3, 4, and this is your final leg down, which then ends on high volume. And then it moves up from our aware zone, ideally from this zone, right? But this is your preferred area for an expanded flat wave C. Okay. Your minimum target is 74K. Your ideal area is between the 618s, the 1.618. So a trend-based fib and a retracement. And that is where we are, of course, at the moment. And then locally, we want this move down to, of course, finish. So here you have quite sure your 2s, right? Your 1, maybe double 1, 2. Price then moves towards the downside. This could be your first wave 4. get a 5 down, and then maybe another shakeout for 5, and then go up. That's what the bulls like to see inside this area. No. Ending something on high volume, be aware of 3, and if price bounces, be aware of a wave 4 and a wave 5. Wave 4 area, by the way, target area for a wave 4 is 71.6K to 77.9K, with the invalidation being 80.8K. So if price would do this and touches the 618, we're not looking for a 1, 2, 3, 4, 5 anymore, which means you're ending something here. But then again, if you look for a wave 4 or a wave B, right? So if you have an impulse down here, it doesn't really matter. You're looking for an impulse down. This can be a wave A, can be a wave 5, can be, what was it, a wave C. But the trade is the same. The opportunity is the same. It's just the bounce that's different. Right? It's the move up that's going to decide what's going to follow. And it doesn't help anyone to talk about Elliott Wave scenarios too far in the future. Right? I also I'm not the worst analyst out there, right? I'm just a guy that knows a lot about something. So generally, analysts that cover detailed scenarios on a high time frame that are too far ahead in time are wrong 9 out of 10 times, because there's so much happening in between on the lower time frames. It makes more sense to use the more like directional bias. Like, for example, is this move down going to be a C, a 5, or an A? I don't know. It doesn't matter what the probabilities say. Is that a flat? Are we going to get a WXY? Are we going to get a a 1, 2, and 3? Right? It doesn't matter. It won't change your approach. The trade is the same. You look for a long at the end of the impulse. It's the move up that matters, because if this is a C, you want motive up, right? If this is an A, you need a corrective move up. But we don't have that info yet. So it doesn't really make too much sense to cover or to say like, oh, a flat has the highest probabilities. It can make people very bullish, and they're like, yo, if that flat is finished, we go straight to all-time high, right? But maybe you're not going to get the motive wave up after this impulse finishes, and this is corrective. And then what? Well, we can look for WXYs even still. It's like, so from a trading point of view, you look for an impulse down here at the moment, at least locally here, right? This move. We isolate this structure from the rest. One aims to eventually long the end, and I explained my approach earlier in the live stream. And then the move up is going to decide the probabilities of different scenarios on the higher time frame. We just have to wait. Right? It doesn't really matter if the probabilities are highest for a flat or a WXY. Right? Is the all-time high a wave B, or is it the wave 5? Now, recently in a video, I covered that this is really difficult to count as a impulse. So preferably at the moment, this would be a B or a wave X, but preferably a B, as explained in that video. Because you can't have a diagonal here, and if you got to cover diagonals, you got to cover diagonals like this, but that's not really ideal. We can make it work as per the video, but it's not ideal. So preferably it's a B, you get a C down, but it might not be a wave C, but it doesn't mean you can't trade it. There's a difference between the analyst and the one that executes. And we, of course, try to do both. Like, I don't only show analysis, I talk about directional bias. It doesn't matter what the low is. It matters that we're looking for a bounce, and we want to be part of the bounce at some point. Where do you put your stop loss after motive and entry on correction? Good question. So how shall I approach it? With, I suppose, the most recent structure. So on a 50, so this is, so in Elite, I make a morning routine every morning. video. It's a video. Today was like 43 minutes. And I always explain what opportunities I see, what I'm looking for, which basically means potential positions that I look for, and what I look for. I don't do signals and all that bullshit. I don't believe in that. You either learn or not. But I explain how one can use Elliott waves to look for opportunities, and I explain what I'm seeing. So one of the opportunities was this SR level, right? So let's start with corrective first. This move towards the upside here locally had a higher probability of being a corrective structure, this move up. And the reason for this is that a diagonal was invalid over here, or it is expanding, but that's incredibly rare. An impulse doesn't work because of the overlap. And then the only option is a multi 1-2. And then you have 1-2, 1-2. But your second 2 is really big, right? It's really big compared to your first wave 2. Like, it's a lot longer in price. That's not something that's very common. Preferably, if you count a multi 1-2, almost touch the 886 as well, which would be a very rare target for it too. But if you count a multi 1-2, then preferably what you like to see is your wave 1, your wave 2 of a highest degree, then your another 1-2, 1-2, and then eventually up. Like, they basically, the second lower degree 1-2s are equal or smaller compared to the higher degree. So that lowers probabilities. Now, as the probabilities are higher, this range is corrective. The areas of resistance are going to be shorts. So this, as touched, is then going to be an opportunity. Stop loss generally on the other side of the area of interest. We did have a volume value area low here as well. So arguably a bit safe. Maybe you want to put it above the high. That's fine, right? And your always minimum target is going to be the low, because if the probabilities are higher, this is corrective, and you're in a local downtrend. If this is corrective, not motive, you always target that low. That's your minimum target. Now, the moment then price here moves towards the downside and took out this low, a multi 1-2 is invalidated. Stop loss goes break even. Worst case scenario, it's continuing the range, but you have no problem anymore. Minimum target is the low, and then you just observe. And if you close here at the low, you don't need all of this per se. If you close here, and that's a 1-2, 1-3, 1-4, that's perfect. Right? Day finished, can look for the next opportunity. If, however, this was too risky, maybe for someone, you wait for the multi 1-2 to be invalidated, which basically means move below this low. You can put a stop order in the books for this. You can put the invalidation again above resistance. Now, of course, your RR is worse, because now you're looking for the low as a minimum target, right? So that's a 0.72 RR. But this can at least then be a TP1. So you take a bit of profit, right? Cover the fees. And then depending on your own management and strategy, you can look for a way to manage your stop loss generally, right? If we check the markets after a TP1, it's relatively smart to, move that stop loss to the downside. However, if you have Elliott wave knowledge, this really helps, is this move to the downside here was on increased volume. The volume is increasing as price is moving down. You don't really like to end something on high volume. It's generally not the highest probabilities. So, one can look for lower, at least over here, right? That's then a 1-1. And if you hold on and you don't get scared, then of course, price continues. But it's about having profit, and it's about consistency. So I'm not someone that talks about get a 1-20 RR, right? Get like the 0.5R, the 2R, the 3R, the 1R, the 5R, and occasionally you may have a 10R, and then you have a 1R again, etc. It's about the consistency, right? It's every trade, try to get a little bit more than you had previously. And sometimes you'll have a really good runner, which is amazing, and you close it at a 1-10, and sometimes you're like, well, it was a good idea, but, and you close it for a 0.3R or a 0.5R. Right? Or even break even, but no money lost. So that is with regards to resistance. I think, I don't know, did I explain that in a video? I think it was the previous live stream where I explained this one. In the video that I recorded on the 30th of January or the 31st, I don't know, you got to check, but make sure to check that video as I explain the reasons why this range is corrective. And this was also, again, morning routine. We were looking for this resistance. You could not count a diagonal here, couldn't count this motive. And for a multi-1-2, the first wave 2 was over 6 times the size of 1. Very low probabilities, that's a 2. So we're looking for something corrective. Then we have to observe our areas of interest, as those are going, or areas of resistance, because those are going to be our areas of interest. First area was the 6-hour order block. And what I explained in the morning routine video then was I want to see trend and turn. So I want to see preferably another leg up, preferably an impulse to the upside, because then I can look for it to slow down into resistance. You can see here very nicely that price here starts to curve, decreasing volume into resistance. Guys, that's always a short. And then your minimum target is the 382 Fibonacci, because after an impulse to the upside, you expect at least a 382 retracement. That is by far most common. Now the 382 over here, wait, I'm still on log, right? So price, just quickly checking if I didn't, oops, mess this one up. Yeah, there we go. So your minimum target is the 382, which was touched here at the beginning of this range, right? And then one can maybe take a TP1, or we'll wait and see what price is going to do. No? And then eventually price moves down. But because the probabilities are higher, this is corrective, your minimum target is this low. Worst case scenario, as per my video 31st of January, worst case scenario is that this goes sideways. But you're already, by that time, you should be in break even, minimum, right? And if you're looking, because the probabilities are higher, this is corrective. If you take a Fibonacci from the low to the high, you will see that the 382 is not yet touched. Now we're looking for a three-wave structure, preferably this high. If corrective for a larger range, this is a wave W or it's an A. Now that means that your wave X or B minimum target is the 382, which was not touched at this low. So then you can hold, observe the structure, volume increases as price is moving down, and the rest is history. So, by the way, thanks maybe a Band-Aid for your for the membership thing. But you get the idea. So that's with corrective structure. So in a trend, if the move up is corrective, look for your areas of resistance. Those are shorts. And sometimes the first area of resistance fills. It's the next area of resistance. Okay? But of course, you need some Elliott wave knowledge. And with motive waves, I kind of explained it just now, but what you're looking for is trend and turn, right? That's Kuhn's theory. So keep it very simple. Overlap, quick move, preferably creates a gap, right? Overlap, sharp move with a gap, and then create overlap again. You know, of course, Elliott Wave Theory would label everything 1, 2, 3, and everything 4, 5, but we don't need to label anything because it can be very tricky to count the amount of 4 1, 2s and therefore know how many 4, 5s. You just want to see all the overlap, slow down, decreasing volume, preferably then into resistance. And then that is the short to end the impulse. And the move down, we don't know. We'll wait and see. Is it corrective? Is it motive? A great example was what we covered in the live stream here when I was live Monday, 2nd of February. You will see in that live stream that I counted this as a 5-wave impulse to the upside. And I had one resistance level here, which was, I actually need to go to a 12-hour time frame, which was that high. Okay, so price moved towards the upside and we're looking for wave 4s and 5s. It's not perfect because the volume was relatively high. Like here, you can see the volume in like the last ranges. But from an Elliott wave point of view, as per the live stream then, we were counting this as 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, and then you're looking for 4, 5. And I had two areas of resistance. I had two value area highs here, and I had that line, which is the low of the gap. Guess where my limit order was? Right? So, and then your minimum target is then the 382. So you pull the 382, not touched, not touched, not touched. Hey, it's touched. Okay, minimum target is touched. But what we also see is that price moves down on increasing volume. Okay, probability for continuation. Stop loss goes from break even to here, because if volume increases, preferably we're looking maybe for something impulsive, and this is a 3, or you get another 1, 2. Stop loss here, because you don't want in an impulse to change the structure, and then down you go. And then this was very tricky because price basically V-shaped instead of giving you like 4 5s. But then it's about stop loss management as price moves down. So hopefully it gives you a little bit of an idea on how to approach some Elliott Wave structures or trading wise. That took a while, but hopefully you kind of get the idea. Which scenario do you think is most likely? A flat correction. The flat is, so now I'm back down again. Do you know Wiki? I think I do, not like privately. However, it's been a long time. I generally don't really watch other analysts, but I think Wiki is another Elliott Wave analyst, no? With like, isn't he the one with the witch hat? I'm not so sure. But I do recognize, the name. But what was the question? Yeah, so a flat is at the moment a scenario I do keep in mind. Yeah, A, B, C, mainly because this move up is a low probability motive. The only way to end the bull market at the all-time high would be a diagonal, but it's not nice. It's not nice because this then has to be a 3-wave structure. Guys, it looks like an impulse. It doesn't look like a 3-wave zigzag. Like these moves can be counted as zigzags or zigzag family structures, but this one doesn't look like a great zigzag. You either have a very tiny C or you have a very tiny A. Like the ratio between A and C, it doesn't really make great sense. So yeah, probabilities would be higher for that to be a B, and then the move down is a C, ending maybe on a high amount of volume. Mind you, locally, this candle has the highest amount of volume, but compared to your counted 3 here at the moment, it's still lower. So something to keep in mind. What's the weekly doing? Yeah, weekly is also still lower. So keep it something to keep an eye on. So it might quote unquote end on relatively high volume, but even preferably in this impulse down, you still get a 4 and a 5 to at least decrease a little bit of volume. But yeah, it's one of the scenarios, and as maybe you weren't here yet, but as I explained, this impulse down would be your wave 5 of a flat wave C at the moment. That's then your end. However, when an impulse is ending, it doesn't really matter what label you give it. It can be wave C, it can be wave A, heck, it can be even a wave 1 for a crazy bear market down to $200. But the trade opportunity is the same, because after an impulse, your 4 5s, you look to long, and what the move up is going to be. Let me clean up the chart. We'll have to wait and see. So the opportunity is the same. It doesn't matter if this is a C or if this is an A for an A, B, C, etc. What matters is that you have the right direction, and then based on new information, which of course we'll cover on the channel when it happens, if that move up from the low, whenever it comes, if we get a range or a move up, if that range or move up is higher probability corrective, you are looking for a move down. So you better get your ass out of the long, no? But if it is motive and you get a 5-wave move up or a leading diagonal, right? Then there is an opportunity for a low to be in, and we'll cover it step by step. After 5 waves up, we do want a corrective move to the downside. Right? That is then what we're looking for, and that is your opportunity. You say it doesn't matter what the bounce is for a trader, but I am a spot holder. For me, it doesn't matter. Okay. So how should I look at your analysis? I'm a spot holder. For me, it doesn't matter. Yeah. So as a spot holder, I mean, what's your time frame would be the question, right? So so as a spot holder, what is the time frame? Are you in the market for the next 30 years? Then it doesn't really matter what price is going to do at like here, right? Yeah, okay, weekly. Yeah, okay, so the weekly chart. But are you, so with the spot bag, what's like I don't need to know your in and out plan, of course, because that's private. But are you hodling Bitcoin because you want to have it for the next 30 years and you don't want to touch it? Or are you more like a swing trader on like a weekly-ish time frame? I mean, that's kind of like investing, where your horizon is like, I want to hold for a year or 2 years and then I want to get out. It's more for 2 years. And then we're talking about the upcoming 2 years, or do you include in your 2 years, let's say the last year? I want to hold 5-year minimum. Okay, that's very long. Yeah, but if you want to hold for at least 5 years, then like it's just like S&P, like everything will crash at some point. But it doesn't really matter what the market like does. Like just like what Warren Buffett says, you just keep like dipping your toe a little bit there, a little bit there, a little bit there. In the book, what's his book? The red cover. I have it in my closet. I read it. He basically says, like, he of course talks about ETFs in that book. He says, like, don't try to catch the low, just DCA, and then we go up. But it's more for 2 years. So in that case, if you have a 2-year horizon, you can still look to quote unquote long the low, because you aim to add a little bit to your spot bag. When the probabilities increase, a low is made, right? And you can DCA on the way down. Okay. So if price forms, the problem is if price forms an impulse down, we'll have to wait and see. But if it's an impulse, and that might be an A or a 1, right? Like no one knows. But even with a spot back with a 2-year horizon, if you get an impulse to the downside here, which eventually finishes, generally your corrective move is equal in size, or at least a 3A2 compared to the move down. So if we take a Fibonacci time from the current high to the all-time high to the current daily candle that created the local low, right? Let's toggle on the 1-to-1. We're talking about in this, so that would mean, hey, the low is in. The 1-to-1 would be June 2026. A corrective structure, depending on the form, can easily take longer. So if it is quote unquote 2 years, if you finish an impulse, the corrective move, so we first have to wait for it to finish, but the corrective move to the upside will take months before that potential, if this is an A or a 1, that would be dramatic. But imagine this is a wave, like the whole impulse, right, from Ultima. Imagine that's a wave A. If you are going to correct in a B, this is going to take a long time. And if you manage to add a bit of spots, once price starts to slow down and one becomes maybe a bit more confident that a 5-wave structure is finished, you'll still have months to recheck the chart and then make another decision, right? If this is going to be a big move up and it's corrective, yes, that book, maybe a Band-Aid, The Intelligent Investor. But if this is corrective to the upside, you can still consider, okay, well, my time horizon was 2 years. I'm in the market already for an X period of time of those 2 years, or maybe for the upcoming 2 years, who knows? But you have months to reevaluate the market. Also, if this would be a WXY, right, WXABC, imagine you buy some spot at the low of your A, wherever that's going to be. Preferably we see it slow down a little bit more, right? So you look for an A, a B, and a C. The best places to buy spot is your A and C. Now, one may say, oh, of course C is the best place to buy, because that's the lowest. It's easier said than done, because you don't know if this low is going to be a wave A or if that's going to be a wave 5. You do not know if after a low over here, wherever that is, right, if price is going to do this or if it's going to do that. We can talk about probabilities, where the probabilities at the moment are higher that this is a B, because this is difficult to count as a motive, which then would kind of mean like we're looking for C and price moves up. Okay, cool, right? But we need a bit of proof. We're not talking about a finished structure at the moment, because at the moment it's unlikely. So it may sound amazing, like, yo, I'm gonna get that C, but you don't know if you're ever gonna get the C. So one might wait for the C down here, but price instead just does this, and you're gonna be left out, and you're gonna be buying here, right? So you do, of course, look for a little bit of a plan, because I suppose the good thing, but also the bad thing of Elliott waves is that it is really good in giving you a directional bias, because very common, as also per my content, very often there are similar reversal areas between different scenarios, and that's where one executes. However, what Elliott waves is not doing very well, but this is where the analyst comes in, is giving one scenario. Like, you can't focus on one scenario. You can't. If someone covers one scenario and only says that's the highest probability, okay, that's cool. But imagine we say the only scenario is a flat, but the move up is going to be corrective. Then what, right? So now we're either looking for a WX and a Y, which means a very long sideways range, or this is a wave A, B, and you look for a C, right? Or you have a WX and a wave Y, right? So now we're like, okay, so I could say, like, okay, on the weekly, this is difficult to count motives. So probabilities are high that this is a B at the moment. The other option is an ending diagonal, but it's not preferred. That's what we cover at the moment, but it doesn't mean that the probabilities change, because we don't have the information to confirm the statement. The confirmation comes with new information, but the trading setup is the same. The DCA spot is the same. If you finish, or we look to finish something to the downside here, just like with the bear market here, right? Especially here, starts curving. Once something looks to get towards its end, it becomes interesting to buy. But what the move up is going to be, well, after a flat, preferably a motive wave, but we don't know. But at least you're on the right side. And then because we're on a weekly, daily time frame, you will have a lot of time to observe a move towards the upside and see if this motive or corrective. If it is corrective, right, imagine price goes down, blah, blah, and then moves up in a three-wave structure, messy, right? If the probabilities are higher, it is corrective. One can always decide to take a bit of spot out or take some profits, because you should be in profit, and then wait again a little bit for another drop. And if locally, again, like, we'll have to wait and see. And if probabilities change again and you get a corrective move down, okay, I can add. Let me share my approach here. Wait, I think this will clear things up. Hopefully I'm doing hopefully you kind of get it. So Bitcoin moved towards the upside from 15K. If someone did not buy here, then at least the minimum place should have been DCAing here. The second time, I said this earlier, the second time you took out 30K, which is first time you take out this high here, that's like the moment the DCA should have started, at least, because you're, as a minimum, you're looking for an ABC up with the potential of a bull market. Best case, of course, but hindsight is easy. So price moves to the upside. From an Elliott Wave analyst point of view, there was no reason to hold on to any position over here. Heck, I could even say one should have sold inside this range. But if we consider a bull market, right, which started to increase in probabilities, of course, with the move up, you're looking for at least a 5-wave structure. So this range is like a no-sell area, but here, right, you get couple 1-2s, price moves up, couple 4-5s. This is always a spot sell. Like, there's no reason to hold on to a bag here. But if this is the all-time high and we're finished, we want to see a motive wave down. Now let's see, how long did this take? In about 77 days, right? It got very clear that this move to the downside is corrective. Minimum target after an impulse up is the 382. So after the all-time high, previous all-time high was made, your minimum target was basically 80K. Right? And if I turn like log off, it would be 86.3. Okay. And one can observe the structure and be patient. But the moment one realizes, well, we're in an uptrend, the probabilities are higher, this is corrective. I sold my spot back because this was clearly a multi-1-2. You move out of this range on high volume. Probabilities are highest, that's a 3. I'm still looking for wave 4-5s. Beautiful. Price starts to curve, decreasing volume. Beautiful trend and turn opportunity as well on the daily time, weekly time frame here. Also on the daily, of course. Sell everything because that's a potential bull market top. But then because it's higher probability corrective, which by the way, if you want the detail, the probabilities were highest, this is corrective. The moment price moved up here. This move made this be a higher probability corrective structure, because before there was always the potential of 1, 2, 3, 4, 5. But then price moved back up here, invalidating a wave 4. So that was the moment where, hey, we're looking at something corrective, highest probability, which then also means that from a spot point of view, one can then consider adding slowly again, right? DCA, 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 and inside like basically this range, and your minimum target is the high. Right? And then the moment the high is taken, we were, of course, not looking for a multi-1-2 to the upside. We were still looking for downside. Moving up, decreasing volume. So then one can start selling again, basically. Yeah, like a spot holder, like if your time frame is 2 years, that's relatively short. It's relatively short for like a spot holder, right? I mean, the bull market itself would be like 3 years. So you're kind of sitting more in like a weekly type of swing trader. And the good thing is you have a lot of time. So you can have a lot of time for the waves to develop. But as I just explained here, it can still mean you go in and out of positions. In 2 year time frame, it's not too long. I mean, if one would enter here, that's July 2023. Elliott Wave analysts should have actually sold pretty much everything around like 2024, 2025, December, January here, because there was no reason to hold. Probabilities weren't highest for a multi-1-2 here, and people talking about 200K and all of that. Like it's not. Like you have the gap here, the acceleration, the volume. That's your 3. These are your 4-5s. Look how long this range is, right? Like that. It's just you're looking for price to drop, not looking for multi-1-2s. Like after a move that's already like 600% or something. Right? So, but yeah. If you sell here, you can observe the structure. If corrective, you aim to buy, look for price to move up, and then price takes out the all-time high, wait for a next range, etc. But now you're looking for, this is like selling area based on what I said at the beginning of the stream here as well. So now with price moving down, we can wait for something to finish here because it's not yet clear where, and locally on the lower time frames, we have to wait and be patient. But once the clarity comes, it becomes interesting to add a bit of spot and dip our toes in the water and start buying. And then the move towards the upside on a daily or weekly time frame will give us the information to either add, hold, or maybe sell a bit. Or if one doesn't sell, right, just wait for the next drop and then sell. But yeah. Hopefully this gets hopefully you kind of get the approach, right? So yeah. Yeah, Ben Graham, he taught where okay, yeah. I mean, it's a lot of Warren Buffett in the book. So Ted Hully, welcome. How's the baby? Doing good, man. She's growing. Almost 3 months now. And she's doing fine. We actually went to the pediatrician today for a regular checkup. So she is 6 kilos and 62 centimeters. And she's very curious. She doesn't cry much, which is great. She has her moments, of course, but no, like it's we're very lucky as first-time parents. Yeah. So are you gonna do alts? Yeah, I mean, whatever the chat says is what I'm doing. If the questions are about Bitcoin, I'll stay on Bitcoin. But so expanded flat scenario. What would be the invalidation? I mean, invalidation, if price would go too deep, it starts to be very unlikely. And if this turns into a W, X, and a Y. So if this range up is too big to be a wave 4, matching the lower degree 2s, and price goes down after. So if this move up is going to be like a 6 fib time or later range to end compared to wave 2, and then it drops, we're probably looking for a WXY. That would then be invalidating a WXY. And if the move towards the upside is going to be corrective, we have to consider the flat to be only W, X, and Y. So it doesn't invalidate it, but you look for a larger range, or this is not a C. Right? It might be an A or a 1 correction, and you go down. I saw Snowflake, by the way. I don't even know. Snowflake, is that a... Is this it? Snowflake? Is this all the information we have? This is a stock, but... oh yeah, I actually recently did ICP, but I can shortly do ICP. We can that's not an issue. Let me quickly check. What's this? Snowflake INC. Not a lot of information to work with, to be honest, unless there's another chart. But this is the all-time low. And generally, what I recommend is if you have alts, right, an alt chart, stock chart, doesn't really matter, but start counting from the all-time low. Start counting from the all-time low. The price action before the all-time low is generally completely useless. So, because if you make a low, the thing is, if you make an all-time low, what you want, if you want to buy, what you want to see is a motive wave to the upside, right? That you want to buy, you want an impulse up. So what we can see here is a 5-wave structure to begin with, followed by a 3-wave. This is your typical 5-wave up, 3-wave down. This is an ABC zigzag, right? So the bulls would look for wave 1, 2, and accelerate in a wave 3. Let me quickly put this on the chart. 1, 2, 3, 4, that's your 5. Followed then by your AB wave C. Sharp corrective structure in your move down, which is common for potentially also wave 2s. Okay. Now, the problem for Snowflake is it didn't actually create a wave 3 to the upside, right? Because this range has overlap. So if we want to count this as a wave 1, right, and we're looking for an impulse, 1, 2, 3, 4, 5, no overlap allowed between 1 and 4. Well, there's overlap here, so this cannot be a wave 4. At least not of the same degree. What the bulls would look for here at this moment is that this is a 1, 2, 3, 4, 5, and this is a 4 matching that 1. Or matching the 2. Sorry, let me just put the shit on the chart here. So 1, 2, and that would be 3, 4, and 5. There you go. And then, of course, your lower degree count here is 1, 2, 3, 4. The question here, this is daily time frame. We need a bit more information. This is quite a long range compared to the 2. So we take a, looks like a flat, by the way. From the high to the low, to the high, fib time. Okay, now it works. It works. We can make that happen. So we can have like a 1, 2, 3, flat in 4, and then 5. Right, the flat is then wave A, wave B, wave C. You can see sharp move, pump, pump, pump. So that is what the bulls would look for. It's not a large wave 3, but at least there's no overlap between 1 and 4. 2 didn't take out the low of 1. 3 is not the shortest wave because that's wave 5. So this would be what you're looking for in a bullish case. Common target area for your wave 2 on the chart. Do I need log here? Yes. So your common target area is on the chart. It's very common for a wave. So if this is for the bulls, a wave A or 1. And I do have to be honest, it doesn't really look too great as an A or 1, but I'll explain why in a second. Then commonly a wave A or 1 retraces to the wave 4 or 2 of a lower degree, which is your 2, your 4. Well, your 4 clearly didn't hold. Your 2 is where we are right now. You see an order block here, right? An order block on the weekly around the 6.6 at 148. So if it bounces anywhere, I would expect it to bounce here. So that would be basically between 150 and 142, maybe 135. But this is kind of like your best pick area for a move towards the upside. This would be too low. Point of control 149. That's inside the area. So yeah, that would be an area of interest for Snowflake. The problem is that 2 is really big, right? And wave 4 is sideways, but it's quite tiny. So we're going to take a fib time and observe. So it's shorter than the 1-to-1. Commonly 4 is larger, but it's not a must. At least it finished after the 302. So this is at least a valid count, but 4 is short. Now, what would be the confirmation? So there is an area of interest here. Easy invalidation, because the invalidation would be the low. Target would be the high. You always risk 1% because we're not stupid, right? We're not YOLOing with our money. We work hard for our money, so we got to take it, handle it with care. We risk always 1% or less. And preferably, ideally, you see signs of strength. Because this can be a wave A, B, and a sharp C, right? 1, 2, get the 3 down, slow down preferably locally, and then move up, right? That's an opportunity if price slows down. If it doesn't slow down and it just keeps tanking like it did with the previous 2 candles, it's not really ideal. Preferably we see it slow down at least on a daily, and then price moves up. Best case scenario, price does this, and then this is the long. Right? You move back above the highs here. This ends on increasing volume, sharp move. It V-shapes back up above the range, confirming a 3-wave move down, highest probability. The next retracement, so you missed the move up here, but the next retracement is then, it's always going to be a long. So that is Snowflake. I saw the one. So I saw ICP as well in the chat. So we're going to quickly go there. I've done ICP recently in the live stream a few days ago. So I shared my issues with ICP. So ICP previously had actually a nice move up followed by a 3. Then I did a live stream here about why I was in a position, but then I exited because I could not count this range motive. Right? We're in a local downtrend. If we want to have a low, we need a motive wave. But we didn't. It was corrective. Very difficult to count any motive wave here. So it doesn't make sense to hold. Now price then moves down, takes out the low, new all-time low. This move for the bulls is very difficult because it looks very 3-wavy. It's a very 3-wavy looking structure. Up, sideways, and up. The only way really to count this bullish is, I need to go to 12-hour. Yeah, the only way to count this bullish is to have this as a 1-2, right? And then like 1-2, 1-2, or sorry, 1-2, 3, 4, 5, 4, 5, or something like that. Like one of these ranges basically has to be the 4 matching this 2. It's just that the 2 is so long and the 4s are almost like non-existent. So it looks very much like a 3-wave structure instead of a 5-wave structure, which is not great for ICP. Let me have a quick look here. 1, 2, 3, 4, 1, 2, 3, 4, 5. Yeah, so this is your wave 4, matching this wave 2. That's not great. That's a very, very tiny wave 4. We have seen this before, bull market of Bitcoin 2017, where the wave 4s were tiny, right? They got actually smaller and smaller as price made all-time highs. It's not the first time. So you know, that would be the wave 4. for an impulse to the upside. But of course, like, yeah, it's not great. Now price touched the 886 here as well. It was closed previously, but now you touch the 886. Well, the 886 is a very rare target for a wave 2. So the probabilities would be against counting a 1, 2, and look for a 3 to the upside. It's not an invalidation. The invalidation is the low. Now, if someone finds a little coin underneath their bed and be like, oh, well, let me just gamble it away. Oh, ICP might be one of your random gambles, but I wouldn't put a big portion of my net worth in something like ICP. Because, you know, and if price goes up, right, very, very nice. You might be able to buy a couple of coffees with whatever you put in. But yeah, you know, don't like, I see this also with questions in other places that I get. Don't get interested in a coin because it's close to all-time low. It's a weakness. It's close to all-time low, not a strength. Yes, if you pull a box like this, you see like, holy shit, all-time high, that's 25,075%. Yo, this can be my sheep, right? Put $100 in, get a couple of million out. You know, you can put $100 in if you can miss it, forget about it, never think about it again, and in a couple of years you might have an alarm here, and maybe it goes off, and maybe it doesn't. But you kind of continue with your day, right? This is not the kind of stuff you want to gamble with higher, like with bigger portfolios. So, yeah, I know ICP. Yeah, oh, man, people love ICP. Pleasure, Neo. By the way, I saw a comment. Yeah, so ICP. I love Munger coming out in June and then go bear market. Yes, Lorian, that's true. Baba Trading. You're such a nice guy, Kunz, that deserves a. Let me do. Otherwise, it may seem I'm talking to myself. You're a wonderful and calm baby, and you can stay sharp and keep us sharp. That's a pleasure. Thanks for the kind words, Baba Trading. And yeah. It's work, of course, with a baby, adjusting schedule. And of course, I'm working, building my business and whatnot stuff on the side. And then my wife has her own business. That's a startup, very much so. So, of course, we're trying to combine our entrepreneurial life with a baby. I suppose the good thing is for us that we're both at home, but it can also be it's not a bad thing. But because you're both at home, of course, a baby needs a lot of energy and attention, so it can also, you know, draw you away from the business. But hey, as we go along, we'll tackle everything. But it's great. Like I wouldn't choose anything else. She's an incredible baby, and mom is an incredible mom. Okay, so I see there's a lot coming in. SUI. I think I'll go through the charts a little bit quicker. Usually I don't need a lot of time. So let's just cover things quick. So SUI, like one of the best coins that I covered on my channel in 2024. As like the probabilities were highest, this was a double zigzag. After an impulse, very clear double 1, 2, double 4, 5. So, and I don't know if I still have the support on my chart. No, not there. I'm afraid I don't have I have the boxes still, not the levels, but I have the boxes. So that was great. And then you're looking for all-time high. That's your minimum target. So that was cool. Now that price moved towards the upside. I haven't been on this chart for a very long time, so we'll just remove all the folders. They're going to be useless. So let's have a look. Can we count this motive? This is your all-time low. Well, the first move, we can count this as an impulse, right? And then a correction, and then an impulse. The bulls would preferably look for a multi-1-2. We cannot count an impulse here, 5-wave structure, because there's overlap. We cannot count a high probability diagonal here because the channel is broken. Right? So you have to consider an expanding diagonal, which is incredibly rare. So basically, you're looking for a multi-1-2. So basically, you have your 1 and your 2, 3, 4, 5. And then you have another 1, 2, 3, 4, 5. But you already might, you might see a bit of a thing with the multi-1-2. That is that the second wave 2 is 3 times the size of the first, and that's not common for a wave 2. Right? Preferably, a wave 2 of a lower degree, and also wave 1, would be shorter in time and price compared to the higher degree 1, 2. This is your higher degree 1, 2. This is your lower degree 1, 2. So that is not nice. So it's kind of difficult to give the highest probabilities to a multi-1-2 on a weekly time frame. Now, if SUI is going to bounce somewhere, it has to be here. One second. I have a feeling we got guests or something. I don't know. I just heard something. But we are still live, right? We're still running. Yeah, okay. So I don't know, my YouTube. Okay, it works. So if SUI bounces somewhere, this would be a good place because Bitcoin falling, perfect. So if this is an impulse, 1, 2, 3, 4, and then like an ending diagonal or ish in your wave 5, preferably a corrective structure of an impulse retraces to your wave 4 or your wave 2 of a lower degree, which is going to be these two ranges. So, and this is interesting. You'll see this on many charts. You get an impulse to the upside, right? And then the correction, first area of support, second area of support. If these two fail, that's a problem. The first area, your wave 4 of a lower degree, provided nice support. Price moved up by over 100%. Eventually gives it back, of course. But now you're at wave 2 of a lower degree. And this is kind of the must hold for SUI. If it fails to hold here, it's a problem. No? It doesn't look very, very attractive at the moment. It looks more now like an ABC to the upside, followed then by maybe either an ABC or you're going all the way down, which is like a 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, maybe another 4, 5. Like if we go to a daily, it's accelerating. We can see here on the daily, so after the high here is made, right? This might still be a wave C. So you have your 1, 2s here. You get the 3 to the downside, and this, look at this range. This is a large range, so that would be a wave 4, which means that you want to see like a wave 5 finish on SUI, and then we can do the same stuff again here on the lower time frame. So we can go down and down and down. 3, 4, 5, 4, 5, 4, 5. Yeah, preferably you're working on your final leg. So 1, 2, 1, 2, 1, 2, 3, 4, 5, 4. All of this being then a 5. Maybe this is a 4 compared to that 2, but preferably you start like curving, like say like trend and turn. So price is moving down on volume. Volume on the daily is increasing. So preferably you don't want to catch a falling knife. I mean, I don't recommend it, I suppose. Everyone has their own plan, but it would be nice if on the lower time frame it starts to slow down and curve. And then on an area of support. Right? Area of support, do I have target boxes? Okay, this one held, but very shortly. And I have a box here, but I have no writing, but there must be support. So support between 83 and 75. If that doesn't hold, it's a problem. These two already were touched here in the previous drop. So inside this range, one of the main areas then is the blue box. But I don't really know what's inside because, I didn't write it down. Let's make this box a little higher to include the point of control. There we go. So I wouldn't be surprised to see at least 84, 75, and you want price to slow down. You just need price to curve. Otherwise, it's just high risk. And if one is very patient, then one can always, of course, wait for a 5, miss the move up, and then get the retracement and trade that, just like what happened here. 5 up, 3 down. Highest probability this is corrective, you look for the high. Right, so, yeah. Bitcoin falling again, I saw, so Bitcoin doing its job. Let's actually put the support on. Yeah. If you have time, oh yeah, What's up, Skugje? Yo, Tim, what's up? No, we actually haven't. Your SUI. Cheers, Ted Hooley. Appreciate your comment. Thoughts on NDQ SPX? Ooh, I haven't done that in a long time. We need to check, but I let's first stick here for a second with let's do link. I haven't looked at link for again a very long time. I'm not really someone that usually when I do alts, I tend to do them in live streams. I don't often really cover stuff in videos. So link. I'm just checking. Someone is in the house, but I have no idea who it is. But it sounds friendly. So anyway, maybe someone from around here. I mean, it must be. So anyway, chain link. Okay. So we have this group one. What's group one? Okay, that was for the bulls. WXY. WX. Okay, that still makes sense. So the bullish scenario remains the same. Which basically is a flat ABC in a W, followed by an X and then a zigzag in Y. So A, B, C, Y, then go up. Same thing here, though, is that you want this to hold. This is your area of interest. If that fails, I mean, next area of interest is this range, of course. So yeah, so this still stands, and we don't have to change anything for this scenario. Bearish flat. Okay, that looks very messy. Old stuff. 886 touched. Weekly bearish scenario. Okay, this is still valid as well. So in this case, 1, 2, 3, 4, 5, 4, 5, like WXY or ABC up. This looks best as an impulse, so preferably you look for ABC. This C though looks very three-wave-ish, as you can see. It's very tricky to count as a nice impulse. But your bearish scenario is yeah, just take out the low. I mean, chain link. What are the probabilities here, you know? I find this one time attack. Yeah, what's up, David? How you doing? You doing time attack in the Lambo? Oh, like that. Time attack is a twist on time. Oh, I see. Well, maybe you could do time attack. Do a little. Put a timer in the Lambo and then highway run, you know, from toll to toll in the mountains. Clock your time. Anyway, of course, there is definitely the potential of at least an impulse down for like an A, B, C. I think we're on a bit of a too high time frame. There are bearish scenarios. The bullish scenario here is W, X, and then Y. A, B, C, finish C on high volume into support, go up, which means that also locally we wanted to slow down. Bearish scenario is A, B, C, you go down further. So it's a question of how far does it go, no? Daily time frame. 1 second. 1, 2, 3, 4. Look at the size of this range. We don't necessarily need to count it in detail. This is preferably 4 for the bulls. Because the size, look at the, it's a larger range than the one you had here. And once the ranges start increasing in size, you're looking at the 4 5s, preferably. Because just like with 1 2s, every lower degree 1 2 is preferably shorter in time and price. Preferably your wave 4 and 5s, it's the other way around. Preferably 5s aren't too long, but preferably your 4s are larger, each higher degree. So the fact this one is relatively big, I mean, you know, we need to then count the corrective structure with a lower high. That's like WXY stuff. But you can at least start counting an impulse here. So you have your 1-2s, wave 3, and you're working on 4-5s. So preferably you're not yet finished on chain link and it still goes down. What do we have here? A monthly level. I really don't have any. Oh, I must have a this point of control. This is a very important area of support. Value area high 7.7, point of control 7.18. Monthly is a bit low, but I would first keep an eye on this zone here. Value area high, point of control, especially the point of control. And then, of course, for an opportunity, right, trading wise or even investing, we just wanted to slow down. Like this is, in my personal opinion, it does not make any sense to buy here. Right, like no, it's like this move up, the first move. Let me just clean this up actually. So this move to the upside is always a higher probability corrective structure. You have overlap, you cannot count an impulse, right? There's overlap here between 1 and 4. Okay. Then you need to consider a leading diagonal, but leading diagonals are quite rare structures, more on the higher time frames. On the 1 minute, there might be one every day, but you know, like we're on a daily here. You're not really a leading diagonal will never have the highest probabilities till proven otherwise. So even though it may work, 1, 2, 3, 4, 5 contracting trend lines, it's not your high probability scenario. And then you have a multi 1, 2, 1, 2, 1, 2, right? Or 2, but then you go too deep. This becomes too long in time compared to higher degree 2. Preferably, this was your low and you continue. The moment it dropped down and created a new low here, you're done, right? With the bullish high probability scenarios, you're looking at something bearish most likely, which then becomes WXY, right? Zigzag, flat, possibly another zigzag or whatever, like just quick Elliott Wave stuff. And then down you go. You take out this low, finally, actually, here. So we could start counting an impulse because this looks like a flat here, right? So if this is a flat, that means this is not the end of the correction, this somewhere here. So we can start counting an impulse from here. That's what I would do. And then you have 1, 2, 3, 4, 5. Maybe this is like your single, your first 1, 2. Bulls would look for 3, 4, one more low. Right? So you're still looking preferably for, this is preferably a 5, increasing volume. Not ideal. 1 hour time frame. There's a lot to talk about, hey? So 1, 2s, acceleration in the 3, start the wave 4, 5 sequence, and then 4, 5, 4, 5, 4, 5 into support. See this long stop loss. If you want to be very safe, because like you want to be very safe, you just put a stop at the low, because honestly, the RR, this is already a 1 to 9. But it needs to, it needs to slow down a bit. It doesn't make sense longing into falling knives, right? It's just going to be a waste of money, right? Like you're going to be like, is it ending there? Maybe there, maybe there, maybe here, maybe here, maybe here. Oh yes, I'm finally correct. Well, I just lost 7%. If we at least take out this high, that's a 1 to 8 RR, I have 1% gain. Yay. You know, I just have to wait maybe a couple of weeks to get there and recover my losses. Doesn't make any sense. So I would like to see price slow down a little bit if it gets into support. If price in the lower time frames can start to curve at least ever so slightly, volume a bit decreasing into this support, opportunity. And then one needs to move or look at the move to the upside and observe the move up. Divine, hey, yeah, Divined is great, man. Divined is great. He actually hangs out in the channel a lot. If you don't know Divine, so Divined, let me get his channel. So he's an Elliott Wave analyst as well. He hangs out in the channel a lot. Divine Trading. Yes, I actually know Stefan personally because we were in the same esports team. He was my manager when I was a player. I was a professional esports player. So yeah, I know Divine. Divine is great. Very, very kind. He's actually live a lot. So, but not at the moment, it seems. Usually he has like a live stream running, no? And then he has like, he does like run a live stream for like a long period of time. But no, I know Stefan Kassing before his SK system time. So I know him from my esports time, and I do have a personal connection with him, right? Like, but we don't talk like much, you know. I can send him a message and we'll have a little chat, but no, so he has the SK system, which is basically a variation. It's built on top of Elliott waves, right? It has like certain Elliott wave elements, but of course it is not. It is something completely different that he has built. I have no experience with the SK trading system, so honestly, I may have to. Oh, I'm already live for like almost 2 hours, but so I can't judge too much on the SK system. I just know that Stefan is doing very well. His wife is doing incredibly well as a doctor, surgeon in Dubai. And yeah, I mean, I wish them the best, no? So how about for more crypto online? I mean, I think I do have to quit the stream relatively soon. Our kiddo had vaccinations today, and I think they're starting to kick in. So I think it would be good to unload mom a little bit very soon, because the vaccinations they start to hurt, I suppose. But more crypto online, like I respect. So take this with respect, okay? Take it with respect. I respect what Ben has built as a business. More crypto online, like it's incredible. 300 subs. I mean, geez, an analyst can only dream about having 300 subs. And I really respect the dedication, the hard work, how he's been working hard on his channel. Right? I respect him as a businessman. But he is not an Elliott Wave analyst. Okay? He is not an Elliott Wave analyst. An Elliott Wave analyst is not counting a shitload of ABCs everywhere on the chart. ABC inside an ABC inside another ABC. Oh, wait, an ABC up. Or let me put the random. That's not how it works. Okay? Like, I respect his dedication. It's just that 300,000 people are following someone that does not know anything about Elliott waves based on the videos. And that's what I have a problem with, because he calls himself an Elliott wave analyst. He is not an Elliott wave analyst. Cutthroat. So I appreciate the business, and I would love to have a drink with him and chat and talk business. But if you look at his videos and you know a little bit about Elliott waves, it's not Elliott waves. It's not. It's something that he created himself, and I hope he's going to give it another name, because it makes Elliott waves look really bad. Right? So it's not Elliott waves, period. And that's also one of the reasons I made my channel, to actually do Elliott waves based on rules and guidelines of Elliott waves. Because I actually watched MCO back in the day. We're talking years ago. But I got annoyed because I saw the mistakes. But that's because I know a lot about Elliott waves. So I can see all the rules that are broken, guidelines broken, like things he doesn't pay attention to. And that's what I struggle with. And 300,000 people, they are looking at someone calling himself an Elliott wave analyst. He's not an Elliott wave analyst. Dot. He can be a great analyst in predicting the charts, but it's not Elliott waves. So I'm not like bitching about his technical skill. I'm talking about the name, the name he gives it, Elliott waves. but they're not doing Elliott waves. That's what I struggle with. Like, I really respect his work, his dedication, his analysis. I don't know how often he's right or wrong, but like, that works. If it works for him, it's amazing. Just like with Stefan Kossing with his SK system, which is derived from Elliott waves, and then I think he built upon it. It's amazing, right? He doesn't count anymore and stuff, but it's amazing. It's really good. But call it something different. But don't write in your bio, don't write professional Elliott wave and technical analyst while you're not doing Elliott waves, because it's not Elliott waves. It is not Elliott waves. And that is what I have a big problem with the channel. So I don't know if people are watching him for Elliott waves. If so, they're wrong, because it's not Elliott waves. But if they're watching for whatever he is doing and his own style, then it's good. But don't call yourself an Elliott wave analyst if you are not an Elliott wave analyst. Cut that out. Clip it and ship it. So again, I respect him a lot and what he's done, like in his career and the business. And I think there's a lot of lessons to learn from a business point of view. He's incredibly dedicated with the amount of videos. I do think that his quantity is hurting his quality, but he's not an Elliott wave analyst. So that's what I think about MCO. So I really respect him, but don't call yourself an Elliott wave analyst if you don't stick to the rules and guidelines in literally every video over the past years. Done. KG Trading, I actually don't know. X Global Force, he's good. He's good. He's a good Elliott wave analyst. I would love to have a drink with X Global as well. X Force Global, not Global Force. X Force Global. I think it would be great to talk to someone that actually sticks to like rules and guidelines, and he does a lot of high time frame stuff. But I like X Global, yeah, or X Force Global. I read it and I'm like, dude, like people I like. I think X Force Global is good. I enjoy Green Star Trading. He only does really high time frame, but he also covers some other stuff. Like he's great, like macro. But I love his personality. Green Star Trading, he does not give a F, right? He is so straightforward. I really enjoy that. You know, I like that because I mean, I'm Dutch. I'm also straightforward. So yeah, you have Green Star, you have X-Force Global, you have myself. MCO is not even in the list of Elliott Wave analysts because he's not an Elliott Wave analyst. I don't actually. You have the Devils, Trade Devils. They are Elliott Wave analysts as well, and they have some good content and some good stuff in there as well. They do have a bit of a different style. With I think they call the Golden Pocket and Algos, and I think they have some other tools. It's not just Elliott Waves, but it's interesting stuff, and they make some longer content. Divine No Trading. He's often here in the channel as well. So he's a growing YouTuber, currently at like 3.5 or 4K. Yeah, Daywalt indeed. Daywalt's South African buddy. My wife is South African. So Daywalt, he learned Elliott Waves in the community, and then started his own channel. So he's doing good. If you listen to Daywalt, you hear a lot of Koen in there as well. Like he speaks like he learned a lot from the way I talk and the content and how I do my scenarios and do my analysis. And he's implementing that on his channel, which is good. You know, that's good. That's great. That's progress. So Daywalt is great. Bitcoin Census is starting with Elliott Waves, but he's not yet, like he still has quite a lot to learn, but it's good to see people trying at least. And I bet that Daywalt can teach him a thing or two, or Bitcoin Census. Like we are in the same WhatsApp group, or in Telegram, we have a direct line, so you can always reach out. But I think that pretty much like covers Elliott Wave YouTube. The thing is, I don't really watch Elliott Wave content myself because I spend so much of my day doing Elliott Waves that I don't really spend the time to check other stuff. So I'm very much just focused on what I do. And another thing, another reason, but this is more, I suppose, as a content creator and analyst, that the better I got, the less I started to look online. And also, other people's scenarios are, for me, often a distraction instead of something that helps. Like, I trust myself. So I don't want the distraction of many other things. So, for example, Greenstar does such high time frame macro. I tend to not go that high. So it can be interesting to watch. But I generally don't watch Elliott Wave content. Yeah. So yeah, XR, like, I gotta, of course, like, wrap things up. I want to help the wife, you know. So bullish scenario is ABC. I was happy to see this low broken because that was about time. I don't like counting a WXY with a triangle as like highest probability. It's not very common. You see this. So a flat A, B, and then C is your high probability, your bullish scenario. Let me quickly check. This is 1, 2, 3. So this is, I think, what we did in the last live stream. So also another thing that I said in the last live stream is that for me, a next move up would not be a 2. It would preferably be a 5. Where is it? There we go. So the common target area for your wave 4 is maximum 118. The moment you hit 0.9, you invalidate a wave 4. And then the only way to count this for the bulls is going to be 1, 2, 1, 2. I'm not so sure if I'm a big fan, but we'll have to wait and see then what this structure is going to be. But the bulls preferably look for a 4. Then again, on the lower time frames, you can see that volume here, right, locally increasing, price moving down. You need it to slow down. It does not make any sense to long in lows. And maybe this is the low, and then in hindsight, you're going to be like, but Koen, yeah, but from a risk to reward perspective and a trading mindset, price is moving down sharply. Look at the curve here. This might be a high volume extended wave 5 to end it with, and then up you go. But I don't currently, and everyone has their own plan or should have, but I don't see a great reason to buy XRP at the moment. Give me some proof. Give me some support. Now the next range would be down here. So what I would like to see is either or. Either price starts to, there we go again, slows down, trend and turn, a bit of overlap, acceleration, slow down into support, buy, look for the move up, or miss the first move up and look for the retracement, because price is never moving in a straight line. And then that becomes the opportunity. Yeah. Because catching a falling knife is very risky. And I have been there, right? Like, oh, price is moving down. Oh, like maybe buy here. Oh, here. And by the time you can actually buy, you're out of money because you lost so often. So price moving down, volume is increasing a bit. Doesn't make sense in my opinion, but have your own plan. This is one of the two that we have. What's this? Oh yeah, this is the ABC. So this is the two areas that I would keep an eye on. Currently, we're still around the first one, and this is the second range, right? And then this would be the way I would count this. So this would be my wave 5 of wave C. Wave C can end on high volume, and then you like price to turn around. But preferably on the low time frame, you just see it slow down a bit. Now, a sensible trader, if one is like, oh, fuck that, I'm not going to wait. Well, then basically your invalidation is there. You're going to look for this. And you risk 1%, 0.5%, 0.25%, but don't throw your whole portfolio in a falling knife. There's always, there's an opportunity. Maybe I would like to see a bit of local proof, but you can always enter 1% risk. If you lose, minus 1%. If you win, might be a lot, right? Yeah. But I explained my approach. Ideally, price slows down locally, or you get a 5 up and then the 3 down, and that's the opportunity. So these are the two that I would look for. on XRP because I just feel it's too risky to buy in such such an environment. But then again, like if you have your own plan, maybe your plan is valid and maybe you're able to snipe the low this time and you're going to be happy and you get like a 1 to 10 RR to the high here. I'm not saying that is wrong trading. I'm just saying what my approach would be from an Elliott Wave point of view. And I may be more safe compared to other analysts that like to take a bit more risk. If you like to take more risk, then you know one can absolutely just do this, risk 1% or less, and just be prepared to lose 1%. You know, never think about. I think this was a quote from Paul Tudor Jones that said like you focus on what you lose, right? Not on what you can win. Focus on your loss. Calculate your position size based on a loss of 1% or less. If you lose, minus 1%, right? And then you still live another day in the markets. $0.90 on XRP, yeah. Yeah, it doesn't look great as a multi-one too. I mean, you know, my bullish count on XRP is that this is a finished one. So the correction didn't finish here, it finished here. And then you have like a triangle. And then this is 1, you get 2, and then 3. That's the bullish count. If you touch the 618, okay. Invalidation is the low, so you still have a lot to go. So this is your bullish scenario. This would be, of course, very bullish because you're looking for a 3. But you need to invalidate the wave 4 first, preferably touch the 618. But that's your bullish take is finished triangle. And then this is 1, 2, 3, 4, 5. Finito, go down, 2, 3. So there's still hope, right? There's still hope. And preferably you actually see a deep retracement in a wave 2. So, you know, preferably it moves down further. 618, 786, 05. We're almost at the 05. But to then and then you go again. That's Elliott waves. It's like, okay, we wanted to go deep, great, could be a wave 2, look for a 3. But from an execution, like from a trading perspective, that doesn't mean we're just longing because it might be a 2. I prefer to see some like, I need confidence. I need the chart to show me it's going to end. So again, I wanted to slow down and then I'll look for a bounce and that will be my buying opportunity. If price just V-shapes up here, that's fine. I will miss this move to the upside. But then it never goes up in a straight line or down. At some point you get a range. So if it goes up and I can count a 5 and we get a messy move down, corrective, that's the buying opportunity. Stop below the low, minimum target is the high that was made, potential for continuation. All right? So when I use these two approaches, I save myself from the potential of just catching knives and price going down and then be like, add here, add here, add here, add here. And then, oops, actually XRP made a huge bull market top here, finished 1, 2, 3, 4, 5, finito, down we go. Right? And then I'm stuck here with all those entries. I don't want to do that. And then the moment price here shows me some signs of strength, mind you, if this is an impulse down, this can also be A, B, C. So if you get a 5 up and a 3 down, manage it well because it might as well be a wave C and then you go down. Right? So it's wave per wave, step by step, range by range. But that's why I'm here, because that's, I mean, I love doing this, Elliott waves, and I just keep creating videos because there's always something new to talk about. No? We always take it range by range and whatnot. Ethereum here, I don't know, this is a very ugly move as a motive wave. But on Ethereum, there is absolutely W, X, A, B, C, Y, or just A, B, C, and then up. Potential for a flat, just like Bitcoin. That's your bullish case. More bullish would be 1, 2, 3. It looks a bit 3 wavy, but yeah. Also on ETH, we in the previous analysis wanted to see price move down. Well, it's definitely doing a good job doing so. And it just this looks so corrective, dude. Like it's so much overlap. Like that has to be like that's 1, 2, 1, 2. So this worst case scenario for ETH is that this is a multi 1-2, and you're currently working on your wave 3, highest volume in the latest candles. So that is your worst case scenario. It's a double 1-2 on Ethereum, volume currently increasing. I mean, on the weekly we're actually still having lower pivots, but on the daily it's not looking too nice. So your bearish scenario would be like double 1, 2, 3, and you're not going to be finished. You'll take that low. It's easy. You'll easily take that low. Like you still need 4 5s. 3, you need a 4 5 4 5. You'll probably take that low. And then the bullish scenario is that the impulse down is a C. The bearish scenario is that that's a wave A or a wave 1. And yeah, the bullish case on Ethereum is a WXY. Where is it? Not that one, clearly. What's this old stuff? Where is my WXY? Oh, here. No. Here. Jesus, I have so many folders, so many things. So then you have just, instead of a double 1-2, you count A, B, C. So instead of 1, 2, 1, 2, 3, you now counted A, B, C. C is an impulse. A, well, expanding diagonal. Very rare. And then after C, you get the X. This is WX, and you look for A, B, C, and Y. We don't really have a lot of space to get a B and a C in because the low is coming. So, yeah. Also here again, just wait. Like it doesn't make sense. Like, wow, 2,000, it's so cheap. Let's buy. Yeah. And what if it goes to 500? Then what you're gonna do with your 2,000 Ethereum? You still lost like a couple of percent there. So wait for it to slow down. It doesn't really make sense at the moment. 1, 2. Is this a 4 matching that 2? I'd prefer a bit of a longer 4 and another 5. Area of support to the downside. We have the 2 ranges here. These are going to be important. So yeah, bearish scenario, multi 1-2, bullish WXY, but for a WXY, you preferably see another B and another Y, which starts to be a problem because price is it's just tanking. So I know EMA is not the best indicator, but if you check EMA set to 15 on the weekly, we're very close on BTC. I think I actually have an indicator that does that for me. Is it this one? Yeah. No? Is it? Maybe. What am I looking at? So I just saved it once because people talk about the 200 weekly, I think. So this is the 200 weekly now. The red line. So that means we are currently just below. Is this correct? It is, right? Is it E? Is it? I never use this stuff. EMA. It's EMA, right? The monthly. Okay, monthly. Yes. Okay, monthly 50 is coming. Yeah. I mean, we moved below it here as well during the bear market, but then moved above, retest, and that was liftoff. So I mean, if you trade this, for example, then that could be, of course, a valid strategy. Like first of all, now we're moving down, like we're almost moving down, like we did here. If you see how steep it's going. So if price moves below this and then back above and flips it, opportunity. Yeah, opportunity. So, yo guys, as much as I love doing analysis and there's a ton of coins, I do think after 2 hours it's time to wrap it up because I think it is my duties as a father to help out mom because she's been busy with the kiddo for the last 2 hours. She had vaccinations today, and I could hear her cry and stuff. And I think I'm gonna help out. So I think what we're probably gonna do a bit more live streams again, just because there's so many questions about alts, and I generally cover the alts during the live streams. I generally don't really make videos too much about the alts. So yeah, on Bitcoin, the analysis started at the beginning of the video. I don't know, like the live stream. I'll put the timestamps in the live stream. Like, just give me a little bit of time. Like somewhere tonight, I live Central European time zone, so I'll make sure that before I go to bed, I put the timestamps in. We covered a couple of alts. I'll put them in as well. Put Bitcoin when the analysis started in. But if you go to the beginning of the stream, you'll find when I started covering Bitcoin, so you know my thoughts on Bitcoin, and yeah, the move to the downside. So no. By the way, what happened here? Close the poll. What's the conclusion here? 50 60k, 50% 60k, 50 21, 30 16, and 40 13. Okay. Okay, 60k. Oh, we're coming for your 60k, guys. Bitcoin is getting there. So yeah, I'll be making content. Tomorrow is another day, another video most likely, and I'll keep you posted about live streams and stuff, of course. So yeah, and then during other live streams, I'll make sure to cover some other alts. So if people ask for XRP, or I'll probably refer people to older live streams. Yeah, that is true, David. You first pass 60k before you get to 50. Yeah, that's true. Thanks everyone for watching. Hopefully you enjoyed. Hopefully I answered a couple of questions. Price is moving down. No panic. Just wait. Like, price is moving down sharply. Just wait for a new range to form. Wait for it to slow down. There is absolutely, in my opinion, zero reason to try and catch a falling knife, unless your plan tells you to do. But generally, when the market is dropping, there's a lot of emotion. And when there's a lot of emotion, it tends to lead to wrong decision making, because you're blinded by the ticks. If price goes up, you're in profit. If price goes down, there's more loss, and maybe you put in more than you wanted, etc. Something that I had a question about is recently in Discord. Someone is in a loss with the liquidation at 50k. If you're not able to sleep at night, or your trade that you put on is affecting your health, please just exit the trade. You can always earn money in another way, but your health should be priority, and you should not go down with your portfolio, right? So take care of your health whenever, in case you are in a bad position. But the market is not showing any signs of strength, and on Bitcoin we're also looking for lower, right? So best case scenario, just like the previous bear market, you wait for price to slow down. At some point you're going to get a range again. Once price starts ranging, we'll analyze the ranges one by one, but once it starts curving from vertical down to more horizontal price action, it can become interesting again to look for buying opportunities. But at the moment on the chart, I mean, it's a bit like it's catching a falling knife, and I learned my lessons back in the day. I don't recommend it, but if it's part of your plan, then you can try. But just make sure you trade safe, right? You can make a lot of money in a bear market. Bull market tends to be famous for the money making, but you can make so much money, guys, in a bear market, right? But it requires maybe a bit of a different mindset sometimes. Some people don't like to sell an asset. They only like to buy an asset, which is absolutely fine, but then you got to wait. You got to wait a little bit. So yeah, 2026, it will absolutely give us chances. There will be ranges, there will be bounces, but here in the beginning, February 5th, we just have to be very patient, and just make sure you care. If you're in a bad position or whatever, take care of yourself, right? So that being said, thank you for watching. If there's any questions, write them in the comment section or post them in Discord and tag me. Yeah, thanks for watching. I'll see you at the next one. Bye-bye.